Welcome back to Navigate Your Wealth. Every so often you say things that make me go, huh? So I write them down, and I can imagine our friends at home are asking the same thing. You're always extremely positive, and I love that about both of you, because it's hard to be positive watching the news these days. You said taxes are on sale right now.
Hard to believe.
Explain.
Hard to believe. Well, you may recall, I've told the story before, back in the 80s, top marginal bracket was 70%. So they are really on sale compared to that. But people don't have long-term memories, they have short-term memories. I want to take you back to 2008. We had the Tax Reduction Act that Trump put into place. And just as an example, somebody that was in the 28% bracket dropped to 22. They lowered the bracket. Okay.
Did you mean 2018?
What did I say? 2008? Yes. Thank
I was
you.
just saying, wait, what was Trump doing? I'm just making sure. Okay, go ahead.
I am so glad you caught that. Yeah. My kids say I say wrong things all the time. I say, I didn't say that. Okay, it's on film.
I'm just saying,
we got this on camera. We're good.
All right, thank you,
so
everyone. 2018. So he brings the taxes down. So 2018 goes from 28 down to 22.
Okay.
Those tax cuts will sunset at the end of 2025. So the beginning of 2026, your 22 is going back to 28. Now, I bring this up because people go, all right, well, it's going from 22 to 28. That's 6 percentage points. That's okay.
No big deal.
It is a big deal. It's not 6%. I want to understand why. When your income or your tax increases from 22 to 28, yes, it's 6 points, but 6 divided into 22 is almost a 30% increase. It's 27%. Do the math. 6 divided into 22 is 27.27%. So it's almost 30%. So for everybody watching today that's in that 22% bracket, when it goes to 28, you are going to pay almost 30% more. So when we say they're on sale, we are not kidding. Time is ticking. The clock is ticking.
Literally now, the next 2 years before that is, well, that's also not even taking into account, Lord knows what in the world they're going to do in D.C., because it could be doubled.
Right.
I mean,
exactly.
So there's the unknown.
It is the unknown. And I think that, you know, if you are looking at taxes today and you're saying, oh gosh, I only have 2 years to make the conversion, listen, we'll figure out exactly what that number looks like. It may not make sense to try to rush it in 2 years. Maybe more time ultimately is better, because by pushing yourself into a very high bracket, maybe unnecessary, right? We look at it in portions to fill each bracket.
Fill the bracket.
So that we can maximize what the taxes are. You know, we had a client, and I love when we can tell a story, because I think it helps you at home to really understand, what does this mean for me? And we had a client that came to us, and she was still working. She was very excited to retire, but she kind of loved her job. And she thought, okay, I know what my retirement income will look like, and I know what my expenses are. They're way less in retirement. I just don't have that many expenses. We said, okay, if that's really what you believe, see if you can live on that smaller number. And she could. She was like so proud of herself and so happy. I'm like, all right, you're spending less in retirement, quote unquote, right? She's still working. So then she said, okay, well, if I'm living off of what I project my retirement income to be, I have more income every month because I'm still working and I have this excess income. What can I do with it? And so we said, you have done a very diligent job of saving in your 401k and your IRAs all this time, but you don't have any Roth options. Maybe with this excess income that you have on a monthly basis, we look at converting some of your IRAs to Roth IRAs, right? For her, it was dollars that she didn't necessarily need. And then in retirement, when all of those qualified accounts now were tax favorable, she would have more spendable income in retirement than even she would need.
So that reminds me of when you say give your dollars certain jobs.
Exactly.
Don't make the same dollar try to do 3 things, and that's kind of how you define.
Absolutely.
Yeah, in this case, she was able to take working dollars and use them to get the tax out of the way. Because now, assuming that everything was in a Roth when the taxes sunset, that 30% increase that others are going to experience, if she was making withdrawals from the Roth, the tax on tax-free is still 0.
Wow, I love that. Okay, so Social Security, we only have 4 minutes left, but let's talk about the tax ramifications. When it was first created in the 30s, you've said that it was not supposed to be taxed. Now it is. What's the rate on that?
That's right. Well, the rate is whatever your tax bracket is. What happens is if you have more than, it's about $40,000, give or take, of income, earned income, and unfortunately your tax-free municipal bond income is included in that calculation. Go figure. Tax-free income from a municipal bond, but it's included in the Social Security calculation. Anyway, if you earn over that number, then it was changed in 1983 to 50% of that Social Security would be taxable. In 1993, that got changed to 85%.
Wow.
So you say, what's the rate? It's whatever rate you fall in. So wherever your income is, if you earn $250,000 and you get $24,000 of Social Security income, 85% of that is going to fall into that same bracket that your last dollar that you earned is in. So it's pretty ugly.
Yeah. You know, I appreciate that you brought up Social Security because we use a strategy where we actually leverage individual Social Security who may not want to turn it on because they don't need the income. And we've just decided that Social Security is taxable, right? We just covered that. And so they say, I'm not going to take it. I'm just going to wait. And we've actually used a strategy with so many of our clients where we say, what if we turn your Social Security on when you don't need it and use the income from that Social Security to do Roth conversions? We want to make every dollar as accessible to you and as beneficial as possible, and obviously having it on the Roth side truly does that.
And it kind of feels good, right?
Well, you got the government to pay your taxes for you. I think it's a brilliant strategy, actually.
It really is, and I've got to give you kudos because I've never, ever heard anyone talk about that. So what can people expect? We only have 2 minutes left in the show. I want them to know that when they call this number, there's absolutely no pressure, no cost, no obligation. You really just want to start that conversation.
Yeah. You know, obviously, this is my mother, and I love the fact that I've gotten to learn from her over my 36 years. But the one thing that she's always said is sometimes what we do flies in the face of conventional wisdom. It's a little bit of out-of-the-box thinking. But I think sometimes that's exactly what you need to feel confident that everything will work because you've explored both sides, right? You've heard the traditional logic. Now let's explore the other side of it. And our approach to taxes and utilizing the tax burden analysis really does that. We want to challenge what your total taxes will be over your lifetime and make sure that you pay the smallest tax possible and do so in a way that maximizes your dollars. When we build your retirement roadmap, we're going to look at your tax burden. We're going to look at the risk that you're taking in the investments that you have. We're going to check your legacy strategy to make sure that you're you're passing the money to your heirs in the way that you want to. We're going to understand when is the best time to turn on your Social Security so that we can maximize those dollars for you. And as always, every plan comes with our GPS, which is growth, protection, and savings. It's a one-page snapshot so that you can see exactly what assets you have.
She mentioned the word box. You worked for a big box many years ago, so you have seen the way it's done, and you've seen the way it can be done, and it's very liberating, isn't it?
It is very liberating, and when Samantha said we're going to, think outside the box and do all these different things, I just want everybody to know we are not experimenting with your money. We have tried and true. I got road burns here to prove that we have gone down this path, and it works. And I laugh sometimes. People say, "Are you sure?" I go, "Look, I promise." This has been done before. I know how it turns up, and I know that we can do a great job with your dollars, and we would love to help you.
Absolutely, and we'd love to hear from you. Be sure to email us, send in your questions anytime, and thanks for joining us, and we'll see you again next week.